Hey, thanks for clicking and watching. I'm going to give you my fastest possible market update. Hope you enjoy. Let's go. A lot has happened since we last met, including inflation going back up to 3.3%. However, if we remove mortgage costs, we could see that inflation is only at 2.4%. So there's a lot of conflicting opinions out there. What does it actually mean and what's happening? And can we expect another rate hike in the next Bank of Canada meeting, which is happening in September? Well, let's check some of these things out. One reason why we wouldn't be raising rates is because, as we could see here from the CBC Economic Insights, is that there's cracks already beginning to show in the Canadian economy, especially when it comes to the Canadian consumer. And here's another report that shows that Canadians are struggling with a higher interest rate environment that we're currently in. And something else we see is that consumer proposals are now surging past pre-pandemic levels. And another factor is that we see unemployment has gone up 3 straight months in a row, up to now 5.5%. What does that mean for the real estate market? Well, one of the things that influence the real estate market is the bond yields, because that's either going to push up or take down the 5-year fixed mortgage rate. And as you can see here, we are pretty much at all-time highs for the bond yield, and they haven't been this high since 2007. So that's definitely causing the 5-year fix to really push up, which is going to put a negative influence on the real estate market. So let's dive into a couple of stats and see what's going on. It's all in here. As you can see, back in May, we were at 2.9% bond yields, and now we're at 4.12% bond yields, which has driven the interest rate from 4.29 all the way up to 5.39%. So that's definitely having an effect. So taking a look at these inventory levels, we can see that they're inching up closer to the 5-year averages. The gray line here represents the 5-year average, and this represents the current inventory level. And it looks like we're gaining more and more inventory every single month. So with our inventory on the rise, what's going on with the sales? Well, we can see here that sales so far in August are down almost 32%, and sales last month were down 25%. So that's one of the reasons why inventory is picking up, because we are getting the normal amount of listings coming to the market a day back to our 5-year averages. So that's back to normalization. However, the sales are dramatically down, which is why we're seeing the increase in inventory, and also why we're seeing a softness in the real estate market right now. And as you can see, that's being represented right here as well. Back in April, we had an average sale price of $825,000, went up to $882,000 in May, and we've been on a steady decline to right now, halfway through August, the average sale price is sitting at $786,000. However, that's still up from last year. But as you can see, we're seeing definitely a softness like we did last year in the summer months because of the increasing inventory and the decreasing sales, which is likely fueled by the uncertainty in the market with inflation and the uncertainty of whether or not interest rates are going to keep going up or going to be held. In my opinion, as long as that we're going to start holding interest rates, because we can see that there's some data and some cracks in the Canadian economy already with joblessness increasing, and then also the consumer delinquencies going up, that's going to probably give enough information for the Bank of Canada to pause interest rates and then continue to see what's happening. So I do believe that the interest rates will pause. And like I said, back in Q1 of this year, any type of good news, if we have 2 to 3 months of good news with inflation and pausing, then we're going to likely see another rally in the real estate market. So if you are a buyer, you should probably be interested in buying when the market's dipping, not when the market's increasing. And hey, I have a lot more to share with you, but I'm out of time. So if you do want more information, the thing that I urge you to do is reach out to the Zahnd team. I'm going to put the number up right here, and we can guide you through this information and guide you through the best decision possible for your situation. Because if you're buying or selling right now and swapping within the market, a lot of this isn't going to really affect you that much, because you're going to be selling and buying within the same market. If you're entering the market or exiting the market, it definitely can have an impact on you, and timing would be potentially important based on your situation. So I'm going to throw the number up right here. Looking forward to hearing from you. Talk to you soon.